let's talk about what's been happening the past few days. There's been a lot of different explanations for why this market move may have transpired, from the yen carry trade to Trump's election odds falling. And I think it's very convenient for people to just try to pin the tail on one particular donkey and say, this is the reason everything is okay. There's actually a multitude of factors right now that kind of all have coalesced. Like many drops can fill a bucket. It doesn't need to be that one drop that is ultimately what causes the spillover, but collectively they do. And so the yen carry trade here is something that we really do need to talk about. The idea behind the yen carry trade for most people out there who aren't involved in FX markets or aren't significant, institutional investors, you effectively borrow in a low yielding currency and you invest in assets denominated in a higher yielding currency. For much of the past 15 years, and really for the post-COVID era, investors have been borrowing in Japanese yen and using the proceeds of those funds to buy all sorts of things: Mexican pesos, the FTSE, the German DAX, US Treasuries, NVIDIA. And so when you're doing these kind of carry trades, you have these risk models that allow you to take certain size positions. And they are, at the end of the day, predicated on volatility staying low. So when the volatility in the yen jumps up, it forces deleveraging. And naturally, if yen-funded positions abroad are also seeing volatility, well, then those positions need to be sold down as well. And it becomes this nasty Ouroboros, right? A snake eating its tail, where a stronger yen begets selling in equities, but because those equities are going down, the margin calls are coming in on the yen carry trades, which in turn are forcing more selling, more liquidation, more repatriation of the yen back to Japan. That is certainly a factor here. I've been looking at a bunch of different models over the past 24 hours to try to get a scope and scale of how far the carry trade may have unwound thus far. And based on the data that I've seen, I think we could probably go with an estimate of close to, say, 55%. I've seen some banks say 50, I've seen some others say 75. So let's just peg it a little on the lower end to be more conservative. This isn't something that just unwinds overnight. And that's why I think about this market, and I think we should exercise still some extreme caution. I want to be directional. I want to be the hero here. I want to do what I did in November. I want to do what I did back in April, where I called the low within a few days, and it was a great trade for me. But this time seems fundamentally different. There are too many factors on the field of play right now, which is why I myself am sticking to directionally neutral vol selling strategies in this environment. Whether or not the market feels that the carry trade unwind is finished, and this is enough of a reason with a 10% bounce in the Nikkei overnight to say that the worst is behind us. If we're looking to VVIX and seeing that it spiked above 150, which historically means you're probably at the end or close to the end of the vol rise, we don't know how long it's going to wash out. But there is something that we can say about how long the washout takes, if this is a typical type of market, excluding the global financial crisis and COVID. Going back through history, looking at all the previous vol spikes since the inception of the VIX, the typical time that the market takes to digest the initial spike is about 7 weeks. 7 weeks is when you start to see that the market begins to find its footing and the vol subsides from these kind of levels. So for traders who are anticipating an immediate reduction in volatility, historically, that seems, well, not well-founded. And more importantly, when you throw in the global financial crisis and COVID, that gets even worse. So right now, let's be patient here. We have the tasty methodology. I think it works. This is the perfect time to take that tool out of the toolkit. Being directional to me is a very sexy, appealing thing to do. But right now, I don't see those stars aligned technically, quantitatively, or fundamentally. So let's just be patient right now and not get too ahead of our skis.
Okay, I think that's good advice. And I do think the best play on the board right now is to be, in some version of short vol. You're seeing it right now. I mean, Tony and I were talking about Apple and other stocks being down this morning, kind of ugly. And when Apple goes down $6 and it can't take the market down very much, they're going to kill vol today. It's down $4 right now, which is about almost 15%. So they're going to murder it. And we're not. You might go down today, but I think that down move was short-lived this morning. We didn't fall for it. That's the good news. I think one thing I want to mention about the carry trade, which I think you have to point out to people because otherwise it's not fair. If it was just so easy as you could borrow money cheap and then do anything you want with it, everybody would do it. The reason it's much harder than it sounds on paper and that the media makes it out to be is because you do have principal risk. The principal risk is the yen goes down, and the yen went down for a long time because when you're borrowing money in yen, you're buying yen. And so the issue with that trade is that, you have to be able to make more money somewhere else to offset the yen risk to make the trade worthwhile. Now, when the NASDAQ's going up 20% in 6 months and the yen's only going down 10%, then the ARB is beautiful. but it's not a risk-free arb by any stretch. It's not like, oh man, I can borrow here and lend here, so I'm just locking in the money. That's not the trade. You have to borrow money and invest in something that that makes more money than you're going to lose on the principal decline in the yen. And now, how do you know the yen's going to go down? Why can't they both go up? Well, they could. The yen goes up now, but then obviously interest rates go up there and interest rates come down here, and the trade or the markets come down here, and the trade gets, everybody talks about the unwind. Yeah, I don't think that that's the reason why this market decided to turn around. Now, obviously, the Japanese market falling 10 or 15% can scare the children. I mean, that's the real, fear. That's a scary move. Japanese market's quite large. Most Americans, in fact, I want to say almost virtually all Americans, don't have money invested in the Japanese market. It's almost impossible to trade in Japan. They don't have round lots, meaning they don't have like 100 shares of stock. They have like sometimes they have crazy prices. It's really hard to get quotes, to clear, language problems. It's almost impossible to trade in Japan. So I would say it was just more of a percentage fear on the Japanese market dropping, and what could that mean, and was there some other reason behind it? I don't think the whole SoftBank thing was relevant either. Nobody here cares about, again, like individual retail investors in the US don't care what happens to SoftBank. I for sure don't.
Yeah, sure.
But I think the market was ready for,
yes.
We had a market, and I think I don't know how many times we've talked about this on Tasty. We had a market where the pot odds, and we talked about this like at crazy length on this network, where the pot odds, if this market was to turn around, favored a huge velocity to the downside, because who was going to stop it? Everybody was already all in. And B, was a payout much greater than the upside afforded you at this point. Problem is always timing. Timing's like, impossible. But the downside was a 3-to-1 or 4-to-1 velocity to the upside and a payout to the upside. And that's exactly what we saw. And that's how markets that go in one direction for so long resolve themselves. In a perfect world, you want the stock market to stair step higher. In a perfect world, yes, you want positive drift to look like a stair step higher. You do not want a straight up, hyperbolic move. You don't want to see a vertical, just a really steep vertical move like this. What you really want to see in a market going higher is a little bit higher. You sell off a little bit, you chop around, you go a little bit higher, you sell off a little bit, you chop around, and you keep doing that for a long period of time. That's what a good stock market is. That is positive drift. That's life. Like, that's how everybody they should teach that in grad school. They should teach that undergrads about, what's life like. Life is positive drift with stair steps. Like you reach some level and you go sideways for a while, you reach another level, you go sideways for a while. Everything works like that. You never want to be in a situation. I mean, there are rare situations, I should say, but you never, generally speaking, want to be in a situation where it's just straight up or straight down. You don't want to spiral up.
Tom,
you want to spiral down.
Think about the lotto winners, right? People who come into a ton of money right away, and then they lose it all because they don't know what to do with it. They don't adjust psychologically to having that vertical increase in their standard of living. So they go bankrupt. It's the same thing. It's like human psychology.
Yeah. I mean, you have to believe there's no reason to work your butt off in life if you don't believe in positive drift, because everything should get better. And that's what the stock market does. That's what we do in life. But you want it to be in such a way where the velocity of the down moves, when things go against you, because that's what happens in life, they're very manageable. And by avoiding the steep upward moves, you can control the down moves. So when a market gets to a point where in 2024, we didn't have a down move in 6 months, the beginning of the year, basically. We had like a little bleep back in whatever it was, April or March or something, a tiny little blip. First, essentially, we didn't have a down move all year. Of course, you are going to pay the price for that. Everybody, we always do. Just a question of when. So we paid the price. Now, the real issue today, I think, Chris, was yesterday, and it sure felt like it, was yesterday the capitulation. And if it was, is the pain from here going to be measured? It certainly looks today because vol did not budge today. And yesterday it was up, what, $8 at the end of the day? It got out of control. I'm talking about vol futures.
Yeah.
They were up $8 at the end of the day. Today they're down 4. So they've given up half the move from yesterday. I would suspect that they're going to be all over the place for the rest of the day, and they may even turn negative or whatever, or may even turn positive. But I kind of feel like the worst may be behind us, at least on the short term.
The VVIX spiked above 150 yesterday on a daily basis, which is pretty rare. There's only been a handful, I think less than 10 occurrences historically where that's occurred. And there's no real strong directional signal coming out of that. Some instances, the market resolves itself higher, some lower, some chop around sideways for a little while. But that's the consistent thing. When you get this spike in the VVIX, it typically means a good deal of market chop in the short term. When do these factors exhaust themselves, right? I know some people, and even the presidential nominee for the Republican ticket himself has been saying that the market's down because Kamala's odds are rising. You know, in fairness, my thesis in June and July after the Trump debate was that a Republican trifecta became the base case scenario. And Trump's predicted odds peak the day that the stock market peak. So Republican trifecta goes away, tax cuts go away, and the market does not like that. So is that the biggest factor? No, but
No.
you split all these little things in. I personally see like this is, you know, the game of when we were kids, maybe you guys had this, it was called thin ice. You basically took a tissue and you suspended it, you put some water on it, and people put marbles on top. And eventually someone's marble broke through and the ice broke and they lost, right?
You had marbles?
You go through these Oh, come on. With Jack's marbles.
We used rocks.
Play CeeLo on the street.
I had marbles.
Oh, sorry. Fancy boy. And so like the way that the market works is there are marbles being added and sometimes marbles being taken away. New concerns come in, new concerns come off. This time around, too many marbles all joined at the same time. So there needs to be a flush. There needs to be a period of just basing out instability. And Tom, who's going to buy right now? Everyone and their mother was already invested. So let's patient. This is going to be a really good buying opportunity around the corner. Just right now, there's a lot to be digested, and patience is the key. Guys, duration is your friend.
They got cheap on a relative basis, yesterday. In the political world, I think things have settled down a little bit. I mean, I just looked at Predictit a minute ago, and the odds in a binary marketplace, Kamala's 53%, 53, and Trump is 50. So those that you can bet that. And what I like about Predictit is that they have, I think 8 million live accounts, 7 or 8 million live accounts. So not everybody's trading the presidential election, but I'm a free market freak. And so, you can bet up to $800. So that's a real market, a real binary market, which is different than a real market. So
basically pick them, right? I mean,
basically pick them.
Yeah.
The margin of error is less than, when it's less than 10%, it's basically pick them. But she's 53, settles at 100, and he's 50, settles at 100.
Yeah.
And that's about, she's had a lead for the last, let's say, week or so. But we'll see what happens when the convention comes to Chicago. And, I don't think the tax cuts are going to impact the market at all. Just like I don't think interest rates, all that kind of stuff is built into it. So I don't think politics right now is going to play that big a role either way. I mean, those numbers are going to reverse, flip flop, stay around the same. I don't think there's much. There's only a small group of people in America that are undecided. So I don't think it's that much is going to change with respect to the political arena at all. I think the stock market needed to get rid of its excess. The stock market needed to kind of just clean itself out, cleanse a little bit. It was too dirty. It was way too overhyped, overblown, but nothing says, 150% VVIX or a 45 VIX. Anton brought up a good point. Yesterday's opening was only the second time in history that we've seen an opening of that, magnitude. It's crazy. So that's a pretty good capitulation moment. That's a pretty good washout. And I think that, I know it's ugly. And I know a lot of people are like, yesterday sucked. And I know. And Tony and I, we spent the whole day, answering emails and phone calls and everything else. So we're very clear of the concept. We know, the pain people are going through. If you're a passive investor, it was painful. If you're a short premium trader, whatever you have on. There was a couple people that were just, naked short, but that was a very, very small percentage of people. the majority of people are playing positive drift. So, but there are a lot of opportunities from a day like yesterday. It is not too late. Let's put it that way. So there's going to be plenty more little stair steps lower. We made the second half of the year a lot more interesting now. That's for sure.
Quick, 25 handle bounce here in the S&P 500. Guys, as we close this out, I want to give everyone an interesting stat to chew on. People saying that the Mag 7 was too rich for its valuation because in July it was sitting about 13.5% above its 5-year PE ratio. Now sitting 3.4% below its 5-year PE ratio. So you want to talk about exhaustion and people seeing potentially a place to pick the bottom and add in longer term. Well, your valuation argument is perhaps eroded at this point in time. Tom, Tony, I'm looking to get long, but I need to see a little bit more meat on the table right now before I can feel confident in doing so.
Hey, everybody your age is looking to get long. None of you guys you haven't experienced, you've never truly experienced a bear market. Yeah, I hope you never do. But
Tom, 2007, I'm in college at my first internship.
Yeah, I know, but.
And then the market crash.
Hold it. You were in college in 2007?
I was.
Did you have skin in the game then? In the market?
I had some money I had some money invested in the market, and I watched it go down to zero.
Yeah, that's good. That's good. I didn't have any money. I didn't have any money invested in the market when I was in college. I didn't have any money.
I didn't have any college.
I mean, no, I wish I did, because I would have learned more. This is a true story. My uncle gave me one share of AT&T stock. It wasn't called AT&T at the time. It was called Telephone and Telegraph or something. I don't remember the original.
My peeps who are a little bit younger than you want me to tell you that they experienced COVID, and yesterday 2 of the 3 highest prints in history in VIX.
Thank you.
Whether it be /VX or VIX, they experienced those. So
telling you my story.
Thank you, chat.
So they have experience.
That doesn't mean anything. And
2008 was the other one.
I got one share of AT&T. It was worth $25. I thought it was $1 million.
Yeah, of course.
But it was one. I had a literal certificate. I didn't know what to do with it.
Right.
I would have cashed it in. Instead, I lost it.
Right.
That's the only stock I own, though. So when we were in college, I remember a professor once talking, who here owns stock? I go, I have one share of Telephone. And then they're like, and he's like, oh, God, shut up.
And Chris, you experienced something today that I don't think you realize yet, but hopefully when you get older, you will realize it. Tom dropped a nugget on you. This is about as deep as Tom will get when he says life is positive drift with stair steps. That's about as deep as this man gets when it comes to giving you that sensitive side, okay? So you experienced something today that you don't really know yet, but years down the line, maybe when you're raising your children, they get a little bit older, you will realize.
You can tell them this story.
That's correct. That is correct.
I felt myself self-actualizing, guys, and actually floating out of my seat.
I felt warmness in my heart for the first time from Tom in a long time. Yeah.
It's beautiful.